All right, here, and the spy's popping back up. So we'll kind of watch that. We'll get to see the spy as we're doing this. So I know this is on Thinkorswim, so it's going to look a little bit differently than what you guys are looking at. But I do want to get into this. So here is round two, part two of my options for beginners, for dummies like myself. You're just getting into it. You just want it broken down real simple. Again, thanks to Silverback in chat. Helped me out the most. He did a little Zoom call with me last Sunday to run me through this. Of course, watching other traders. Of course, Deck, Kush, active trader. But Silverback really helped me out. So when you see Silverback, go holler at him and he will 100% send you in the right direction. So let's break this down real quickly. Now, let's get out of November the 4th. That's my father's birthday, by the way. And give a shout out to him. Know that on expiration date, as the day goes on, like always on Friday, which usually, of course, the SPY, you're going to have 3. Every week, you're going to have 3. You can tell Monday, Wednesday, Friday, Monday, Wednesday, Friday, Monday, Wednesday, Friday. So you're always going to have 3. It's fine if you want to do, the day it actually expires, right? You need to worry about, though, the theta, and the theta ramps up as the day goes on. So that's what's going to decay against you, and that's really going to go against you as the day goes on. You can tell, and trust me, the more this goes, the worse it's going to get. And we'll break all this down on what they mean. Overall, logistically, I'm going to start in the middle, though. And I know this is on Thinkorswim, so it really breaks it down a little bit easier. But we have calls on one side, we have puts on the other, right? So we can go long, we can go short. In the money is the purple color. Out of the money is the black color. So out of the money for the short, in the money, right? Of course, as you can tell, that's going to be in the money. The first one that's actually... Now, that's just termage and verbiage, team. I don't want a lot of traders, and I'm glad Silverback... That just overall just says, hey, we're in the... That doesn't mean, hey, you can't make money. And I'm going to break that down as well, right? But the main thing you just need to overall look at is saying, hey, I want to go long or do I want to go short? Which do I want to do? And now, again... Breaking this down, we'll start with the long side. You feel like this is going to break out over 386, and so what would you want to do? You'd probably want to do, once it jumps in as the first one in the money, you can do 385 if you want to, is take that contract, right? And this is how much you're going to pay per contract. You're going to get 100 shares, essentially, right? So it's going to cost you $165 to trade that 385 as of right now call contract. Now, what does data mean, or data? What does delta mean? Well, right now at 385, if it runs up, and you want to take it right now, and it runs up $1 in your favor, you're going to make every contract, you're going to make 62, and of course it keeps changing, we'll just call it 60. You're going to make $60 essentially every dollar it runs in your favor. So you just get one contract. This stock, you take the 385 call contract. It runs to just say 390. You will have made $60 times 5. It ran $5, right? So 60, 120, 180, 240. Right, 30. I was trying to do like 5 times, but 300, right? So you'll probably make somewhere roughly around $300 if it goes up 5 full dollars on one contract. You'll make about $300 on one. And so that's why you can kind of do the math already, know how much you're going to make. But also if it goes against you, it's going to then be $60 essentially against you in every dollar it goes against you, right? So say it goes to, you're still holding this, and it's at 380 now. You are now down $300. Does that make sense, team? It's pretty simple stuff. Theta, look at it, already still ramping up against you, as I told you, especially as it runs up in the day and goes up higher. You got to take those profits if you're going long. So usually what you want to look at, maybe if you don't want to do that, you can always do, well, let's go to Monday, right? It's 3 days away. Theta's not nearly as bad. I won't make as much, on the same contract, the 385 contract, right? But I'm going to pay a little bit more. Makes sense, team? It's pretty simple stuff. So instead of paying right now, just say one contract, you're paying $170. Now you're paying $340 for the contract. And then overall, what's going to happen with Theta, this is how much it's going to go down the next day. So just say pause right now, boom, it's at 85 cents. You can then subtract that from this, and that's what the contract, would be. Or say like this one, which of course those expire today. Theta, so this now Monday, minus 50 cents or so. We'll go back to 385. So this 340 minus 50 cents or so. So this on Monday is going to be about 285, 290. As of right now, boom, pause, it closes. This will be about this. That's how much that contract's going to cost. That's how much it goes against you in one day. So you know how much you're now going to lose, or that theta is going against you. That's why they always talk about it. The more you hold these, it's going to go against you, and you're not going to make nearly as much money sometimes because of that. At least when you're day trading is my point. If you're looking to do what Deck and I are kind of be doing, this is why you need to worry about these things just a little bit. Theta, not so much, and that's why I won't worry about theta except for the expiration date, because it's going to ramp up against you as the day goes on. So I won't usually typically do expiration date unless it's early in the morning, and it's not nearly as bad, right? First 2, 3, 4 hours of the day, let's say first 2 hours of the day or so, you're fine. It's about now moving forward is where that theta starts ramping against you. So that kind of makes sense for now. Above 386, so now we are in the money here at 386, right? And so let's just go even just at 386 now. So we'd pay 120, 130, essentially 128, whatever for one contract. Going real bad. Look what it's going to cost. It's going to be down to nothing on Monday, of course, because they expire. But to my point, look how that's ramping up against you badly now. You make $50, it moves in your direction. Now these numbers, don't worry about too much percentage change. That's just kind of where they've started the day and how much if you would have been to start to now. Yeah, that's just to kind of give you a figure of going, man, I can make money in options. I just leave it on there to kind of open my eyes. These two numbers now, volume and open interest, and you need to have them in this order. Volume, open interest, delta, if you want theta, and then you're bidding your ass. Bidding your ass so you can see how much you're going to pay. Delta, so you know how much you're going to make per dollar it moves in your direction per contract. And then all your volume and open interest. Now, volume is key because you want to see, what's volume? It's pretty crucial. We already know that. And think of it literally as volume or / your time in sales. It has already gone through. That is how many times that contract has been traded today. So 385 and 386 is by far the two most liquid contracts today. It's not even close, right? And then it comes in at number 2 or 3, I should say, at 383. And you go all the way down to any of these levels, right? And you can kind of open them up and you can see, you can make money on any of these. Let's go all the way. If you want to even do a November 9th, right? It's going to cost a little bit more to get in, right? It's going to cost $700 to get in per contract. You'll make 51 per month of theta. It's not going to go against you as bad, right? Not going to go against you as bad. But and then the main thing you want to look at, this would be one of your better options, right? Especially for in the money. Now you're going to be paying more. You're making more. A little riskier. But that's where a lot of the volume's at, right? A lot of already shares have gone through. And now that's volume, right? How many shares have already gone through? Open interest would be, think of it kind of like a level 2. How many shares are still sitting there to wait to be filled? So at 385, we still have 44,875 option contracts, or essentially overall, that are out there, right? That are wanting to get filled overall. That's your kind of your inkling to go, hey, this is by far your most liquid. You can tell, like I talked about earlier, D. Sarli, 385 is by far that key number. Just big time. Every 5, if you look at it, usually typically is. If you look at the SPY, I'll just go to all. Scroll back down to get to where we are here overall. Just look where we are today. Let's go with 380. Not so bad, right? But let's get now in the when we start going, especially for calls. When we start getting closer in the money and then further down the line. 385, most liquid. Let's go to 390, right? Most liquid over here, right? Let's go to 395. Out of all the rest of them around it, most liquid. I bet that's almost said 2,000. There it is, because I was looking at the shares. Or how much volume's gone through. 400, right? Let's go to 405. Okay, right? Oops, let's not place an order. Nope. Not want to do anything like that right now. But you can typically go through and see what are going to be the highest volume plays and where a lot of the traders are looking to get in. So hopefully that makes sense. Overall, just breaking it down again. And same for the put side, right? So if you want to do a put and you think this is going to go back down and you want to go in your favor, if you want to do 387, you're going to pay 160, 160-ish or so per contract. It's going to go in your favor every dollar, $60. It'll go against you every contract. It goes against you $1. You're going to lose $60. So again, if kind of like the one I was just going earlier, you get up $5, you're up $300. You get down $5, you're down $300. That's really typically what you want to be looking for overall. Those are your main things. Which one you want to take. Usually, yes, the best one is the first one in the money if you're going to day trade it. Like right now, 385 or 386 would be your top 2. And that's why even like I said, Silverback was saying you could do any of these. If you want to, do 380 or 390 if you want to. There's some decent volume at 390, right? You're just overall, you're going to pay nothing for it too, which is great. You're just not going to make anything. You're only going to make $8 per, you got to load up on that, which you can. It doesn't cost a lot, but you've got to load up on it. So you can make money. You just got to get more of them. It's just kind of figuring out where you like to get in. Do you like making a little bit of money, not having to pay a lot, not a lot of risk there? Cool. I'm going to go up higher. You know what? I want to make money. I want my money now. You're going to go really far behind in the money, out of the almost it's so far in the money. But if you want to be, hey, I just want to make some money. I don't want to do a lot of risk. I want, medium to low risk. That's what, and make decent money pretty quickly. It's these first 2 in the money. Usually maybe one time, sometimes the first one out of the money. These 3 right here, typically the first 2 on either side. Now you can go a little bit out of it. 5 and 5 is the best. That's why I usually do 10, because you can see 5 one way, 5 the other. Do it on 12 right now. But usually it's 5 and 5. That's usually going to be your best. But usually you're 2 in the money, 2 out of the money. Those would be the best that I've seen overall. So if you're looking to make money fast, those would be the two to choose. Know that expiration date later that goes on. It's almost a little safer because of Theta to maybe even, I know it's going to cost you a little more, but maybe go to the next expiration date so you can make some money here overall and not have to do a lot of risk either. But usually, typically, most days you're fine. However you want to look at it, if you want to go 2 days, usually the closest to the expiration date's the best. So the earlier this morning, this was great. So come Monday morning, this one's still going to be great. Tuesday morning, of course, this one's going to be great. Into Wednesday morning, right, or whatever, whatever. No, this one, because that's Monday, right? Yeah, it's Monday. So this one's going to be Tuesday. Or Wednesday, I should say. So Monday, this will be great in the morning as the day goes by. It's going to get a little riskier. Maybe go over to the Wednesday's contract. Then, of course, Tuesday, that's the only one we're going to have. So we're looking great on Tuesday because, of course, we don't expire till Wednesday. So you're looking great all day overall. And that, you get my point as that works on. So that's kind of where you want to look at Delta, how that's going to work for you in your favor. Every dollar, that's all you have to look at. So you can kind of look how much money you're going to make. Volumes, how much movement has been made overall on that ticker today so far. And, of course, how much is still out there to be had and orders out there to be placed. Just breaking that down a little bit easier. Then, of course, I'm not going to then show you, go back over to, say, the active trader and how to trade it. It's going to be different in every platform and how you want to do that. I'm typically going to do something along the lines of this, where I'll be having my contract down here and I can just trade my contract. I don't actually look at the chart. My chart's just going to be here. So kind of like deck, this will be my order box, as you could see right here. And that's what I've been doing. And this, I'm just watching the SPY. So like right now, cool, I think the SPY is going to squeeze and go up to 387, 388. I'm taking that 386 call contract right now, watching this burst up to that upper VWAP band, which I almost am going to say, guys, we got close to pulling back there, just about 20 minutes ago or so, but now we're getting super close to going on that squeeze mode, like I said, hitting that high of day number. But that's probably how I'll end up trading it right there too as well, for placing my orders and looking at charting. Hopefully that makes sense overall as well, team. Part 2, trading for beginners on options.